This is another thing that I use. It's mine, but it's this. This was a day with a lowest accepted price, an afternoon pullback low, a wide POC, and a price probe. Wow. Again, a lot of mouthfuls. So what does that mean? Well, after that day, we didn't gap higher. We didn't open above the previous day's high, but we opened and basically drove straight up. Now, what is the lowest accepted price? Again, this is my little thing I use. When A period closes, if B period opens, right where basically A closed, and either goes straight up or comes in maybe, again, it depends on the range of A. I mean, if it's a $3 range and B comes in 20 cents and then goes straight up, as opposed to if the range in A was only 70 cents, if B comes in 20 cents, not going to use it. It's a moot point. So it is context, but it shows you how powerful the move is in B period. And if it does become what I like to call a lap or lowest accepted price, LAP, generally you will go trend and hold it. Because if it was that powerful when B opened, to either not come in at all or come in only a couple of cents and go straight up, this market should continue up the whole day. And that's what this did. Now, generally with a lowest accepted price, we get more than one set of single prints. Now, we did have a second set in C, but they filled. But we did hold the single prints, and we did hold the lowest accepted price. And I had a huge trade on this day. Why? Well, just like the other day, let's go over it. We had higher value. We took out the overnight high. We took out the initial balance high. We had indices that were up. We had a lowest accepted price. You keep going on and on without checklists, and it shows you, even though we're one-time framing down, we raised POC, right? All those things. Even if POC was here at the time. I'm not looking for a new high in the day. I'm just looking, if anything, to go back to where POC is, especially if I'm taking good size. And on these trades, I'll generally take 50 to 100 contracts on the calls. And I'm using either the single print fill or the lowest accepted price being rejected. If the market's that strong, there's no way we should get below B's low. And we didn't. We went back up. We ended up raising POC. They even tried again in J and K. And I remember buying more, but not as much. And then we probed. So keep in mind, this is all after the fact. Granted. But ask anybody in our trading room. These trades are all being told to people before they happen. Specifically on every day. I said if we pull back, I will be looking for longs. I didn't say it here. I said it up here. When E was an inside bar, I told the room, if the market's getting too long and they're going to shake out weak longs, I will be looking to get long. Not up here. Here. And I did. I'm always looking for the next trade based on things. And that's why we use these terminology in the room. I like to say I want to be the lion waiting in the tall weeds. I don't want to run all over the Serengeti trying to catch my prey. Trying to chase these algos is like, and I use this a lot, is like running around trying to catch a squirrel with a fork. Not going to happen. But if you're laying in the tall weeds and all of a sudden a herd of gazelle come by and the weakest one is lagging behind, and this is the weakest one here because now this is the weakest long's getting out, and now I know my risk reward is getting better and better, well, I'm just going to snatch out of those weeds and grab them. Doesn't mean I'm going to be right, but the odds and risk reward are a lot better than chasing them all over the place.